Good afternoon. Welcome to the Investment Committee for the Town of Mount Desert. I'm Phil Lichtenstein, the chair, and I'd like to bring the meeting to order. I'd like to have anyone present either on Zoom or in person to identify themselves and make just a quick introduction so we all know who's here so we can then go by our first names.
I'm May Weiler.
I'm Derwin Lund.
Matt Weaver, Chief Investment Officer for First National Wealth Management.
Okay, Matt, which material would you like me to pull up for your presentation here? I have quarter 3 and quarter 4. I have all of 2024. I have or calendar year 24. Which one would you like me to open?
Let's look at the calendar year and fourth quarter data. So it's
okay.
I think that's the most relevant. Great choice.
Okay.
Yeah. It was a busy quarter for us. We did a lot of buying of both equities and fixed income securities. We had a very large contribution to the account in mid-September, May. I think that's.
Yes. Yeah, it was September that I deposited the CIP funds.
Yeah, so that was close to $2 million, and we went to work and looked to buy CDs and individual corporate bonds if we liked what we saw in terms of the rating, and we've added a little bit to the duration of the portfolio. We've been buying a little bit longer dated bonds and CDs in anticipation of some rate cuts later this year, and we're now being told that we're likely to see one or two based upon the data, the inflation data we've received over the last couple of months. But the good news here is fiscal year. We were 8.38 on the portfolio against a blended benchmark of 8.10. For the quarter, we were just slightly negative 0.65 against the benchmark of minus 1.08. I believe the reason for that is our slight bias to value. We had a pullback in the fourth quarter, just a slight pullback, and typically growth underperforms value and when we have down markets, and that was the case there. So it's not our gap between the value and growth is not a large one, but we're with that bias for the time being. We feel that equity markets are fairly valued at this point. They're not overvalued, undervalued. I think we're fairly valued. So we're going to have to pick our spots. We haven't had a correction of 10% in some time, and it's probably due. So we have that cash at hand, and I know May, you had a question from one of the other members about the cash allocation, and our target is sorry. Can you hear me okay?
Yes.
That's much better.
Okay. So the cash allocation, our target is close to 3 to 4%. I mentioned that large contribution in September, and that's the reason why that number is a little north of 4%. We're putting it that money to work when we see the opportunity, and I expect us to be closer to that 4 to 5% target here in a month or so. The money is not sitting there, not earning a decent return. It's getting close to 4.5%. So that's actually better than what you can get on a 3-year CD at this point. So, but we again, we feel like if we're going to have a couple of rate cuts, it makes sense to try to lock in, some 2-year, 3-year, 4-year, 5-year bonds or CDs, because when we get those rate cuts, we'll have lower rates here in the second and third quarter. But overall, we're pleased. Do you have any questions for me regarding the performance?
I specifically don't. I mean, I've been aware of the market trends, and I think you've been really clever as far as, taking advantage of cash and doing things with cash and buying CDs and being able to look for the next place to go, and also in bonds, which I understand in theory, but I don't have any great experience in purchasing them myself as, I would say as a regular investor. I personally don't own any bonds, and I'm aware of the bond market and how it is, and I know it's how important it is for us as a municipality because we bond everything we can.
Sure, and I tend to look for CDs with municipal money, although with this portfolio, it's a fairly large municipal portfolio. So I do go out and buy a corporate bond from time to time, but it's the individual corporate bonds make up about $1 million out of the 6 that we have in fixed income. The rest of the allocation is in individual CDs and Vanguard bond funds. And the bonds that are in there are from Citigroup, and I think there's a Goldman Sachs, Florida Power and Light. The default risk is very low. So I tend to look at CDs first, and then if occasionally buy a corporate bond. But I know one of the other members had a question about the ratings on the bonds, and I think that question, May, was why is 5 million of the fixed income portfolio not rated? And the reason for that is that CDs do not get rated like a bond. And
Excellent answer.
that's also true for bond funds as well. They're not rated. They're a basket.
So for example, the Vanguard fund is definitely any of those funds, ETFs and funds are never rated, if I'm not mistaken, correct?
Right. It's a basket of individual fixed income securities, and they're mostly investment grade. There might be a small component of below B rated, but that's why they're diversified, and the expense ratios obviously are very low for Vanguard, and we want to pass on that low fee to our clients. So
I agree with that.
let's see. I want to address any of these other questions, May, before I go on. Look at the portfolio. What are the fees based on? When we took over in 2015, it was a very competitive RFP process. We came out on top. Fee was part of it. I think we were on the lower end of the banks that were part of that proposal process. We're charging 40 basis points, and that was based on a market value or portfolio that was significantly less than what it is today. It was closer to, I think, 6 million when we took over, and we're now close to we're over 13. So
Close to 14.
Not all of that, of course, is principal appreciation, but we've had some contributions, and so I talked to Pete today because we want to be proactive about these things, and we realize that this is a much more significant relationship in terms of market value, and we our relationship with the town is a good one. We certainly, have a lot of charitable organizations that we donate to in the MDI area, and we want to support the town in any way we can. So I asked Pete if we could discount from where we are and move it from 40 basis points to 30 basis points. So we're going to be proactive with that and do that as of this month.
Well, thank you for
Awesome.
that.
Thank you. That's awesome. That's
Well,
wonderful.
really good business relationships are built on trust, and I think you've earned our trust, and I think you've also been very, very transparent to us and helpful when we needed you at the first.
Well,
Absolutely.
thank you. That's a good segue, I think, to the next thing I wanted to talk about, and that's the ESG piece. And I know one of your members brought that up, and May and I have been discussing it today. And Jake definitely sent that email. You sent that to me, May, and I don't know. I just don't know where it went, May. I don't have a good excuse for you. It's
Don't worry.
my mea culpa. But as of right now, the town owns 200,000 of the Vanguard Social Index Fund. And
So this is small. So again, so one of our past members was CFO for Friends of Acadia, and where everything had to be in ESG. And I think we were trying to navigate, where the investment committee in the town never wanted to be called on why are we spread and only in social responsibility stocks where we could have had higher returns in other places. With that said, I'm also the chair of the sustainability committee, and I really believe in, and trying to make socially responsible, decisions when possible and profitable, because just because I believe in that doesn't mean every citizen believes that. So it puts me in a place of understanding and know that just because I believe in something doesn't mean everybody else does. And
sure.
I didn't know. So we're quite low. I mean, $200,000 and is nothing.
Now,
I think
based on the terms, the language in the policy, I need to move that up to 400, 500,000 to get it within
correct.
that range. So I plan on doing that. I want to be thoughtful about it and look for opportunities. It adds a little bit of beta to the portfolio risk because that any ESG fund is going to be heavy on tech because there's a lot of companies that make it through the screen that are tech related. So for instance, this fund is about 43% tech against the S&P, which is about, I think the weighting is closer to 32%. So, but it's 10% or a little less of the equity allocation. So yeah, you're right. It's not gonna move the needle too much. But it does add a little bit of, I guess, overexposure to tech. But I get over time, that should be good for the return. There in years where energy outperforms, then typically ESG funds underperform. And then when we have good years in tech, we should see outperformance in the ESG fund. So yeah, I tell my clients that if they want to add an ESG component, that's fine. And I think 10% is an appropriate allocation for the component. So I don't have a I don't think it's something that you want to go all in on. I don't think it's something that should be 100% of a portfolio, but having a component is okay as long as the client knows that there's a little bit more risk.
But that way, the way I see it, there's a little bit for everybody in this. That way, we can't appease everyone. And if we were all in ESGs and didn't get the returns, or vice versa, where we're all in, owning every possible big oil or defense contractor or tobacco firm. That would also alienate a good chunk of our population too. So I think we've come up with something, and we can watch it over time. We can always change if things do better over time. We can always change that allocation.
Yeah.
There's hope in I have to be optimistic for the future that these are good companies, and hopefully they can perform well and still take care of the environment or be socially responsible.
Yeah, and the funds out there are, from some of the larger companies, Fidelity or Federate or whoever it might be, they create an ESG product, then they really have to create their own benchmark, right? So
Exactly.
That is that a conflict? I don't know. I guess not. But the reason that I'm using the Vanguard fund is, for one thing, the expense ratio is only 14 basis points, so you're almost getting into the market for free. And it's broad based. It's almost 450 positions in the fund, and I prefer broad based funds over a concentrated portfolio. May,
Thank you.
May, did I answer all of the questions that?
And he's on, Jamie. I want to welcome you to the call. If you do have any questions, here's a good chance that we've been trying to answer some of the questions directly from Matt that you'd asked us.
Oh, thank you. Sorry, I'm late, but I didn't think I'd make it. So, and sorry.
Well, good job.
But
Glad
yeah,
to have you.
Buildings are taller where you are.
Oh, yeah.
yeah. Plane was an hour early, so.
Well,
Better than late.
Yep.
So
That's
did you understand what Matt was referring to regarding the ESG positions and with the minor risks of the town? Yes, that any social environmental stock could could have some risk, but it's only no more than 10% of our portfolio.
I did understand it, but I read it I was just in the policy statement that we're supposed to be 13%. Is that a mandate?
I think it's up to 13% is what the policy was.
I have 7 to 12%.
7 to 12?
7 to 12%.
Oh,
yeah.
I thought I saw 13 somewhere. Okay. Well, we're right there.
Not far off.
No, very close.
A few basis point off there.
And then Jamie was also wondering about I think when you were for your question about the recent quarterly statement, Jamie, was that for Q3 that you were asking about? Okay.
I get confused though. Essentially that's our Q1, right?
For 25, yes. Yeah, for fiscal year 25,
yeah,
correct.
That was the one, yeah. It had different information that I could gather. I got the other one so soon before.
Okay.
Yesterday, but the first one had different information, and obviously the numbers have changed too. But yeah, I was referring to that.
Okay. But yeah, so Matt, Jamie was wondering about how on the statement it says that we hold 7 equities and 4 of them appear to exceed our maximum requirement of 5%. And I think Jamie was, and where is that in the investment policy that I can?
Yeah, and those were funds. I don't know. I mean, of course, the funds hold a lot, but we only have 7 funds. And are each of those funds only? I mean, that's not very many. So obviously, stocks in them.
My understanding is that language is for individual equities.
Right. We don't have any.
We don't have any. I tend not to buy individual stocks for municipalities. I don't want the headline risk in the portfolio.
Mm-hmm.
And I prefer broad-based ETFs or funds at low cost, and we'll just try to get the allocations right in those funds. And based upon our investment committee, will meets twice a month. We're going to have a big meeting here, our annual meeting, where we go over our fund models and also rebalance our portfolios based upon research that we have for 25, and make some changes on the margins to our allocations to each asset class. So we should be doing that in mid-February, and we may be making some changes at that point.
Is that helpful, Jamie? And you understand that threshold is for individual stocks and not for funds?
So for the committee, then we are saying that does not apply in the case of funds. Maybe we should.
Correct. If you were going to buy an individual, so as an example, if we were going to buy Microsoft today, that would be the limit. But if Microsoft is in any of those funds, it is irrelevant.
Right.
Because you're buying it. Okay.
Yep.
And then also, and I think Matt explained why they do what they do for municipalities. Again, if for some reason they decide, if Microsoft went south next week, you didn't lose the farm.
Of course, if it went north.
Well, it'd be better because I have a little bit.
Okay, good. Thank you for that. And then Jamie was also wondering about how our equities and the fixed income assets are at the low end of our statement's minimum requirement, whereas the cash is over twice the liquidity requirement of $500,000. So I think Jamie was wondering if you could follow up or explain that a little bit, Matt.
Yeah. So that contribution of almost $2 million that we received in late September, move that cash allocation up, and we've been allocating to both sides of the portfolio. But we've also had some fixed income securities mature in the fourth quarter as well, so we have to go out and replace them. If you'll notice, the statement that was sent the other day, May. There's 2 or 3 pages of just buys of individual fixed income securities here, starting in early October, where we, looking to buy CDs and keep them at or under that 250K FDIC threshold, so that the town is fully insured in case of a bank failure. So we're good there. That's another reason why I use CDs. So we're a little. I know we're on the lower end of the ranges with equity. As I mentioned earlier, we believe that markets are fairly valued at this point. If we do see an opportunity and we have that correction, and I know will be coming at some point. Being in this business since the mid '90s, I've seen some ugly corrections, and I know, they everything's fine until it isn't. It's one of the things I like to say, in the markets, and it can change quickly, and when we have those pullbacks, we want to take advantage of it and allocate that cash. So I'm going to add that ESG position. That's going to be in that $400,000 to $500,000 position size. So that'll lower the cash as well.
Okay. And Jamie, the large contribution of cash that he's referring to is the contribution to the CIP that we do yearly after approval from the town meeting for the budget for that year. So we put in 1.7 million into the investments to account for the CIP budget.
Got it, May. Thanks. So I missed, I guess, the first part, but I was curious about whether it would make sense to think about at least separating the CIT money from the long-term money and thinking about it, because I think there are probably different objectives. each or not?
So I guess I think I need some more clarification with that question because the CIP is broken down by reserve. And it has allocations proportionate to the amount that's in that reserve and the assets that are needing funding from that specific reserve. And that makes up for the majority of this investment account, is the reserves that we account for. But then another part of that is an unallocated reserve that we have that's just under the general fund, not under our reserve funds, which is not restricted in the same way that the reserves, the CIP reserves are. But it is very much, it's broken down and allocated based on the reserve type, if that makes sense.
Does that understand? Do you understand that now?
Yeah,
Is that
well,
the-
so what percentage do you know roughly of the total fund is the CIT money?
That's a very good question. I can get that number to you.
Okay, thanks.
Yeah. I would say
Less than 20%.
that is not reserve funds. So I mean, we think about,
I'm just doing a quick math in my head.
we have about
1.8.
I think we have over $10 million in the reserves themselves. And then we have another, so that's for the general fund. Then we have another $1 million for the marinas part of the CIP and their reserve funds. And then we have, I think, $1 million in the unallocated. So I guess it's 1 million out of the 13 million would be the unallocated investment reserve balance.
Okay. Okay, I didn't know that. Yeah, thanks.
Yeah, for sure.
Sorry.
No, go ahead.
I just wanted to add my 2 cents about reserve funds in general. This is what I tell my municipal clients. We do manage a lot of reserve funds, fire truck fund, police cruiser, whatever town pier, that has an investment horizon that's 10, 15, 20 years down the road. My only, I guess, my feeling about reserves is as you get closer and that investment horizon is 2 or 3 years, it may be time to de-risk so that principal is safe. Because if we have a severe downturn, we won't have enough time to recoup those principal losses. So that's just a reminder that I tell my municipal clients that if there's a reserve that's getting close to using the funds, it's something to think about.
Okay, that's
So
really good to know.
So
Yeah,
we're gonna buy a fire truck, or do some major road construction, or i.e. the marina was gonna do a large project in there. You're gonna take advantage of bringing the funds in.
We will be too.
Right,
Rebuilding that pier.
yeah, for
within the
sure.
next
So then
5
that means
years.
I need to take a distribution and add it to our general fund in order
Right.
to finance. Yeah,
Very good
yeah,
point.
and I usually follow the audit has a number that is due to the general fund from the reserves account. And then I was planning on making a transfer at the end of fiscal year 24, but I might want to do it a little bit earlier now, even without an audited number, to make sure that we have all the funds available. But that's something I'll have to think about. Thank you, Matt. That's an excellent point.
Yeah, you're welcome.
There. Let's see. Okay, those were the questions from Jamie that I needed your assistance to answer, Matt. So the other ones I can handle. I think that's all my questions for you, unless anyone, Phil or Jamie, if you have any more.
I've had enough, thanks.
Well, those were all really good Jamie, those were all really good
Yeah.
questions. And
Excellent.
instead of, internalizing them, it's really good to put them out in the open. And I hope you gain better understanding, because I think we all do when we talk about things like this. I mean, there's a lot of moving pieces, as you can see, and a lot of allocations and separate pots that, have to be protected.
Okay. Matt, unless you have anything else for us, do you want me to bring up the other report or anything?
I think I'm gone through my piece. So
Perfect. Perfect.
we'll make sure we have this amended policy in the file going forward, and we'll have that ESG component there at probably 8 to 10%, at least initially.
Sounds good.
Excellent.
Thank you very much.
Listen, thank you so much for your time, and again, to you and your staff for doing doing very well for our towns and our town specifically. And we look forward to seeing you in person. Hopefully sometime around the 15th when the quarter shuts, sometime around after the 15th of September would probably be a really good time, right?
Yeah.
The quarter would end September 15th or September 1st.
Doesn't the quarter end October? Which quarter are we talking about? 1 or 2 or 3 or 4?
September 30th.
Well, it's the 30th.
Okay, so it would be October then.
Yeah, so would October still work for you to come?
Of course.
And
That would make more sense, right?
Right.
To have you come in a month before the quarter shuts.
that's true. And I would even, I do need, when it comes to the reconciliations for our accounts, I think I needed a little bit more than just 15 days after the period ends.
Right.
So we can talk about
Yeah.
the date to set, but I definitely need more than 15 days after the period ends to report.
We may want to have another meeting as a group after 6:30.
Yes. But Matt, I'll keep in contact with you, and I can figure out a meeting time this fall once all of our periods have ended, that we can get you in via Zoom or in person for another meeting.
That sounds great.
Great. Thank you, Matt.
Thank
Always
you, Matt.
a pleasure, folks. Thank you.
Likewise.
Take
Happy
care.
Friday. Bye.
Bye-bye.
Have a good weekend.
You too.
Jamie, where are you?
I'm in New York City, darling.
You're in New York. What are that building? Is that the Empire State Building?
No,
way
it's
in
too
the
short. It's
background?
too short.
No, I'm looking at the big.
No,
way in
I'm
the
on,
background.
I don't know what
Looks
that,
like it looks like the top of
He's
it.
in Soho.
no, I don't know what that is.
Anyhow, thank you for your questions. I don't know if you heard Matt explain that you mentioned something about fees. They're lowering their fees from 40 basis points to 30 basis points due to the size of our portfolio and earned. So that's a really nice gift that they're doing for us.
Yes.
That's called, I think we've earned their business. I think that it's been very mutual. The town's done well by them, and they feel that the other way around.
Symbiotic
It's
relationship.
thank you.
Yeah.
They didn't just do that because I asked the question, did they?
I hope
No,
so.
no.
We got to give you credit for it.
I believe it's probably
earned.
something to do with the fact that the ESG requirement wasn't being put into place because they hadn't got the email from Jake with the amended investment policy back in May of 2023. So now we're in compliance with that.
Right.
That's a good break.
Yeah, it is. It's fantastic. I'm really grateful for that. So I realized just now that we didn't view and approve the minutes from the 6/14 meeting.
Right. He wasn't on, so it's perfect. So
Exactly. Yeah.
I'm going to make a motion to approve the minutes from the last meeting.
If you need to pull them up, I can.
And let's get the date. The date was what, 6:30? When did we meet?
6/14/2024.
Yeah. So I'd like to I'd like to make a motion to approve the minutes from 6/14/2024.
I will second.
Thank you.
Thank you.
Okay.
That way the selectmen can see them and all that. They get posted, and that's
Okay,
that's
one question, because I was late coming. Is any part of this tax exempt? I don't know with municipal, is it?
All of it,
It's all tax.
All of
exempt.
it.
So we
all
have
of
no
it, yeah.
We have no
No.
capital gains worries. Okay.
No, as a government, we are not subject to tax, and I don't do any filing.
But we can tax people, but the town has the great privilege that we can tax individuals
That is correct.
and businesses. So it's a one-way street.
Very good.
Provide services.
And it's a nice community.
Yes, yes, that too.
So one of the things that
Okay.
when you get back and there's some time between now and the June meeting and Michael joining back up, we'd like to find one more citizen to join us. And we've also, one of the other things we discussed was try to bend the meeting time. Fridays seem to be best for Matt Weaver, and that's always, it's a good day for me, but we'd like to see if we can get Wendy Littlefield
Yeah,
to be able to attend. So I'll reach out to Wendy on my own to find out, is there a better time of day on a Friday for her to, to be able to attend? Because I think it's really important to have a board member here.
yeah. We originally had the meeting scheduled for 3, but Matt had a 3:30 and that wasn't gonna work, so, but I'll make sure that
And I'll reach out to her to find it, because she's missed the last
I
3 or
know.
4. She has, but since you've been involved at least.
Yeah. Yeah, so we can figure that out.
There's no policy changes that I'd like to make today. And
Let's see. Jamie was also wondering if we have a number or percentage that we want in cash at all times. And my answer to that is I'm not sure of. Do you mean cash in the investment fund or cash in our bank accounts?
Well, I just from the documents I got, I don't know where that cash is, but so
Okay.
in the fall one, it was like 300,000 something. I mean, it was 330,000, and then in the last one, it was 10%, whatever. But
Okay.
and so I don't know, because with the needs for the money going in and out, I just don't know what your requirements are, and whether we can even have a policy on it.
Does it the 500,000 perhaps of a liquidity requirement that might be a number that we want to have in cash at all times?
Right, but you've got so much more than that, right?
Correct. Yeah. So, but I guess is your question, do we want to revisit that part of the investment policy?
Well, I just don't know what your needs. It's really based, I think, on your needs for having cash available when you have to pay something, right?
Gotcha. So yeah, we have the $500,000 liquidity, but when it comes to, I guess, operating, I'm just making sure we have enough money in the general fund to make these purchases, and if we don't have a cash flow problem here, so it hasn't been an issue yet. But
we do have a money market account at a separate bank.
That is correct.
For our day-to-day operations.
That's true.
So,
we do have a money market account with
where all the payrolls and things like that are all taken care of out of that.
if necessary.
If
I
necessary.
haven't pulled from that this fiscal year either because we have enough funds in the operating account. Another thing to think about is that our ICS reserve account, which is connected to our operating account, we started that and got that last fall, I believe, October of 23, and it started at 5.25%. I believe that was the return, and now that's gone down significantly in the last few months, down to less than 4%.
Because of the decrease in interest rates.
Correct.
Of course.
Yes. So that's something to think about. That's where we have a significant amount of our cash is in that ICS reserve account. So we might have to talk about going out to bid for, I wouldn't say money market, but another possibility of being able to capitalize on interest in a different manner. But at the same time, the rates are not great right now, so I might not want to mess with it. But it's just something to think about, that we're not getting as good of interest as we were a year ago.
But we took advantage of the high interest rates when we could.
Correct.
That money's not in these things we were talking about today. That's separate, right?
No, sir.
That's
No,
it.
sir.
It's in a separate account.
That is in Bar
And-
Harbor
and-
Bank and Trust.
And how much money is in that on average, roughly?
We have, as of now, I just did a transfer for 4 million last month, so I think we have $4.1 million in the ICS reserve, and then we have another 4 million in the operating account.
In addition to the 13 million then here?
In addition to the 13 million that's not liquid, obviously with our first national wealth management, and then we have one. I have it on my reporting today that I'll show you. We have over $1 million in our money market account at First National Bank.
Huh.
So we're talking about $9 million of liquid assets at this moment.
Is that enough for you?
We're pretty fortunate, aren't we?
Yes, we are.
Yeah.
There are many municipalities of which they have the problems that we do.
Yeah.
So when we start discussing as far as, trying to, have staff retention and possibly doing raises and things, it's not like the town's broke.
Yeah.
Okay, so let's see. So we put in the minutes, and then now I will do my rundown on the first half of fiscal year 2025, and I will pull up my reports and share my screen.
Like that, Phil, the town is not poor by any means.
Thought you'd want to hear that.
Mhm.
We are not.
All right,
Very
so
fortunate.
Jamie, can you see this?
Yes, I can.
Okay, well, I was right on the money at 9.9 million in cash right now. That's under Fund 100, so our general fund. Then in our ARPA account, we have 294,000, which is all restricted for the rest of our Spectrum broadband project. We've paid one invoice out of that, and I need to transfer those funds from the operating account or from the ARPA account to reimburse the operating account. And then
Is that clear, Jamie?
Yep.
Oh, and Jamie, here's the other thing. I didn't even get to the part of our cash. Well, I wouldn't say it's our
Your sweeps.
that's the ICS. But it keeps going back. But our 300 fund, which is our bonds, the amount that's another bank account that we hold. I transfer the expenses that were paid on behalf of the capital projects fund from the capital projects fund into the general fund. And as of right now, we have $6 million of bond funds to be paid out to the general fund when capital projects have been completed.
Does anyone manage that or?
I mean, there's a what's the term? I think it's called arbitrage. And that's when I can't make more interest on these bond funds than we are paying.
So you can't invest, basically you can't invest the money more than you're paying out.
So, and since these are specifically bond funds that they're borrowed, correct, we cannot earn more interest on them. So they're in a different account outside so that they're not gaining as much interest, so that we're not out of compliance with arbitrage rules, laws. So this is $6 million that I use to replenish the general fund when we make expenses or we pay for expenses on behalf of the capital projects. These are all of our bonds that we've taken out, and the majority of them are with Bar Harbor.
Bank of Trust.
Correct.
Oh,
Something outside. So then here is just this is just our investments, our balances. So our general fund, this is sort of unallocated. I think, Jamie, this is what we were talking about with the breakdown of the reserves. This right here is for 100. That's our 100 unallocated. And then this, the 400 reserve, this is right here, our CIP. reserves. And then down here for 600, this is the marina's
CIP.
share of the CIP reserve funds.
The marina fund needs to be kept separate because of the way the structure for the marina is as an enterprise fund. So it can't be in like the general pool of the regular CIP. It needs to be separated out for that classification.
For governmental accounting purposes, it is a enterprise fund and it is accounted for differently than general government.
And it's our warrant article that our approval, it's just a transparent article, just so the taxpayers are aware of this exists and how it does, but everything is taken care of out of the two funds.
Mm-hmm.
They generate their income.
Yeah. And then this report right here is just a breakdown of how much of the funds are allocated to each of the reserve accounts. So we have at the top, we have these unallocated or the capital land acquisition, capital gains in there. We can talk about that. And then pretty much just everything, public works equipment is what they pay for their trucks out of. This just shows the proportional share of the reserve funds owed to each asset class, essentially.
So so basically on our warrant articles, when we get the individual budget, so for example, when Public Works comes in, they're going to have a contribution directly for each of these vehicles. All these line items go directly in from their budget.
But the CIP budget is separate, and we present the CIP as one document.
Correct. Where it used to be individual reserves accounts in each of the budgets, and it was very complicated and difficult to track.
Yeah, I could totally see that. And so, yeah, you can see the proportion. Yeah, almost $1 million of the CIP is for the marina. Separately, like I said, account for it separately.
And the pier project, what do you think? It's estimated in the 3 to 4 range.
3 to 5.
So it's higher. It's higher than I thought. So they're going to have to redo the large concrete pier.
Are we talking about bonding this?
Yeah, but
This would be bonding.
this will be bonded.
Yeah,
when
this
the
won't be
time
CIP
comes. Right.
funds.
It's a large project.
And it should be bonded in.
Yeah.
We have to.
We'll just have to take out another bond for that
Correct.
in this town meeting. It's good to know.
But they have the income to pay it off.
Yeah, for sure.
It's a moneymaker still.
Okay, so then this report right here is we have a cemetery and trust account with Bar Harbor Wealth Management. And these are, as you can see, pretty small numbers, but we have these are scholarships that were restricted, I guess, by the donors of these trust accounts. And so we've paid for the scholarships that they have approved, or the select board has approved. Believe the Stanley scholarship has a covenant that it's only $100. I guess not only, but it's a very old trust and a very old covenant, and so that was what they said at the time that a Mount Desert High School student gets $100. And then the Reynolds one is more is more lenient, I guess, and it's flexible. So we decide, and I bring it to the select board, but we decide what the scholarship is going to be for the Reynolds scholarship based on the performance of that trust.
So it wouldn't be
year.
the same every year, Jamie.
Exactly. This past year for the 2024 graduating senior, we had $350. That was based on calendar year 23's performance, and the year before that it was $300. So
It's nice that it's gone up.
yeah, I don't know if it'll be. I don't believe it'll be going up
It's to
this
stay
year. It
flat.
might stay 350 or go down to 300. It just depends. I have to do that analysis. Okay, yeah. So that's our trust funds right there. And then this is the interest income that we earn from our various bank accounts. So let's see here. As of December, we are at 67.5% of our estimated interest earnings for fiscal year 25, which is honestly better than I thought we would be based on how the rates have been going.
And we're halfway through, right?
Yes, we are, exactly. And so the fact that we're over half or over 50% of our estimated earnings at 6-month mark.
Why are all these numbers minuses?
Oh,
Great question.
it's the way that our accounting system accounts for if it's for debits or credits essentially. And usually the revenues have a negative balance or a negative sign, and the expenses have a positive.
Is it? Oh, okay.
So we're adding, not subtracting. When you see a minus, we're actually adding, not subtracting.
Yes, and then when you see a positive, we're subtracting.
We're spending.
Yes, I did. I was brought up with the old math where a plus sign meant.
Yeah. No, and we still follow that. I promise. Just our software, our financial software, just has a special way of letting us know which one's which. Great question. We do not have negative 121,000. And then here's the interest that we've earned for the first half of fiscal year 25 on our capital projects. So as you can see, it's significantly less because we haven't paid that much interest on our issues yet. Dividends, and that is the end of the report. So total of for the appropriation of $410,000 in interest revenue. Even close. We only have 100,000 or 108,000 left until we reach our goal. So you can see 301,000 of interest revenue.
And a little less than 5 months to go.
Yeah, not bad.
Not bad. That's right.
Well,
Okay.
Nate, got a complicated job.
And she can explain it, Jamie, let alone that she understands it. One thing is to understand it, the second thing is to explain it. So I give her a lot of credit for being able to explain, the ups and the downs.
Thank you.
All right.
Okay.
So
next thing on the agenda, last meeting, Jamie, you had a question about land trusts and their ESG investments. And how they were doing if they were only investing in ESGs. And I reached out to several land trusts, but 2 got back to me, and I was able to discuss with the people who were in charge of their investments. One was Frenchman Bay Conservancy, and the other one was down east. It's in Washington County. Anyway. So I talked to them and I asked them, as nonprofit organizations whose number one mission is to be environmentally sustainable and contribute positively to the environment and the overall being of everyone, they diversify their portfolios, and even these land trusts do not do all ESG investing. I thought that was really interesting.
So that's very different than from what Jason Irvin was on our committee, and the way they had to handle the funds at Friends of Acadia.
Mm-hmm.
Friends of Acadia is all ESG based.
Interesting. And so when I was thinking of land trusts, I didn't even think about Friends of Acadia because they're not a land trust.
The other land trusts do well at doing good.
Yeah,
Right.
yeah. But they basically said they're the people that are on their finance and investment boards, they're very worried about, or their number one goal is growth. And obviously they do invest in ESGs, but they're having to be careful and not to put all their eggs in one environmentally friendly basket. And they're not saying that they're investing in tobacco or big oil, but I think it's very interesting that they're
Well, if they want to make acquisitions, they need to have the capital, and,
exactly.
and opportunities come up, and to take advantage of those opportunities, they have to be ready to play.
Yeah. So Frenchman Bay Conservancy, they have a diverse portfolio, and it's not just ESGs, and they're doing great.
They're a really good organization. They've done great. They really have bought some beautiful pieces of land.
Yeah, I love them. So, Jamie, I thought that was really interesting.
Yeah.
That, like I said, I was only able to talk to a couple, but organizations that I think that would do 100% ESG investing are not doing it.
Yeah,
I believe like your libraries do not do that. Like
Well,
I believe like the Jessup Library would not be like 100% ESG.
Mhm.
Again, how else would they pay for their capital, programs that they need?
Do
Yeah.
we have any restrictions on the other side? Do we invest or not invest in oil or fossil fuels, or do we have any restrictions on the tobacco?
That's a great question. I don't see that in our investment policy, but I know Phil.
I thought I brought up, I don't think we own big tobacco. That was
No.
something that I brought up a few years ago, and I believe we're not invested in any big tobacco.
No, we're not. Or I don't believe we're invested in oil either. I know we're in big tech.
I think he has one fund. I think there's one fund. I think there's one fund in there that is oil.
Because oil's starting to buy up all the green organizations anyway, the technologies.
I just know we're in medical,
Mostly
big tech.
I think there's one of the holdings, one of the funds is I think it's ConocoPhillips actually.
Okay,
I think we have a small position in ConocoPhillips.
interesting.
I'm open to make any changes at the next meeting if it's something that's bothered by anybody, and we are a collective force.
But how would that work, Phil, or anybody? If we just own whatever the Vanguard fund is, we can't ask them to strip out one thing, can we?
I think
No, they can't. If you buy that fund, it has to be insulated from tobacco and oil because it's a basket like
right.
that Matt explains to us.
Yeah. So that one he just bought for $200,000, that will not have big oil or tobacco.
Correct.
Right. Yeah. That is a certified ESG.
ESG wouldn't have any of the above.
Yeah.
Oh, but if the town decided that it didn't want, as you were saying, well, we have ConocoPhillips and maybe we shouldn't have it, you have to change the fund then, right?
Yeah, we have to change the investment policy.
I think that's a bond though. I think the ConocoPhillips is a bond.
Right. We'd have to ask Matt to.
Right. So I think we go back and look at. I can go back and look at the portfolio after the meeting, but I think if I remember, there's a ConocoPhillips along the same list where the Sally Mae ones were. I think you'll see that was a bond.
I'm just curious. I'm not.
No. But if we were going to make any policy changes, we do have to bring it to the voters. We need to be transparent.
Correct.
To the town meeting.
Yeah.
Yes, because that's how we brought our ESG allocation to the town meeting 2 years ago when we were at the neighborhood house.
Yeah. And that was the 7 to 12%.
Correct. And we're working to get to that 12%.
Yes, we are. Yeah, as of today.
No, that came up at the last meeting too with him. It's a slow thing. I think they're very careful how they.
Oh,
they
absolutely.
do it.
Yeah.
I think they're doing a good job. I think we're doing even though now that he's not on the call, I think we've done very well by the first, and they've been very competitive, and come back to us. They respect our business and how we, as a municipality, and they are very careful. And it's not new territory to them. We're not the only municipality that they manage.
Yeah, he had really good points there.
Especially, and I thought some helpful things when you need to take the money out, and knowing like 2 to 3 years out that we're going to be buying a $1.5 million fire truck. You don't want it all invested and have only $750,000 at the time, and you got to bond the rest.
Yeah.
I think that was a very good point. As I said in the thing, and I just throw it out again as a thought, is I think we have to obviously be very careful, but I think we're awfully conservative.
I think, unfortunately, that it goes with the territory. I think you'll find that all your municipalities and nonprofits operate in a similar environment, unfortunately, as far as an investment portfolio.
not with equity investments as low as we have. I don't think. I mean, from the ones I'm involved with, they don't. And our policy says up to 65. I'm not saying we should be. I'd rather be safe than sorry, but I do think we're missing some of the growth that's happened in the last several years.
I don't disagree with you. I think that, again, when you work with these, portfolio managers, that's what we pay them for, and that's where their fees come from, is to make sure that we don't lose the farm. And there's always going to be like, oh, we missed that Tesla stock when it tripled. That's not always what a municipality gets to do.
No, and he did say he said we should be careful.
And everything, he has to think about 208. Remember how bad 2008 was. He wants to make sure that could be 6 months, 6 years, or 6 weeks away. And they always have to have some, they want to have damage control plan, because we're the first ones to scream when they lose everything.
I'm just saying,
Oh, I hear you.
I'm saying, yeah.
But that's why I think it's important that we discuss this and talk about it, and it's just not something that's hidden. And again, I think it's something that we could continue to confront him on, when we meet again in June.
Absolutely.
I think it goes also. That's why I asked the question about the banks. I mean, I think it's a bank mentality more than an investment mentality in a way.
We're in Maine, Bangor Savings, I think, would be the same thing. I think Barber Bank and Trust, there's reason why these banks have been successful. They are because they're very conservative and ridden through the bad times as much as the good times.
Okay, so the next was continuing discussion on new member recruitment.
And I think, Jamie, if once you're back, and maybe you and I can think about throw out some ideas. I only want someone that would have some kind of investment knowledge, and and understand that how confidential, even though we're transparency as there's nothing hidden here. It's not something you want to be really talking about at the coffee shop. Mm-hmm. We want someone that again I want someone with integrity.
So that raises a question, maybe, Darrell, and this is one for you. Is all this money is a great thing for the town, but is there a political liability involved here? I mean, if it was general knowledge that we had all this money and we were, would there be a move to lower taxes, for example?
Who knows? I wouldn't discount that idea, Jamie.
So how transparent is it?
We don't print the portfolio in the town report, I can tell you that.
No, but it's in the, I have to do quarterly reports to the select board.
Yeah, so
it's in there.
It does go to the select board. That means it goes to the citizens, because all those packets to the select board are all public. We're a municipality. This is all public documents, but we don't fly the flag up, by the way. Hey, we have $14 million invested.
Yeah. No, it's part of the quarterly investment reports that I submit to the select board.
And we're lucky, again, I think there are many towns that would cut off their ring fingers to have the problems that we have. And I think when you bring up as far as the political ramifications, I think it's aware of, but I think a conservative approach is usually, your board of selectmen is going to probably knows this is like our, that whole marina could go south tomorrow.
Sure.
We'd have to, we had all those king tides last year. Luckily our town fared fairly well, but if it didn't, and we were replacing, roads and buildings, we'd have an opportunity to at least recover some of it.
And another thing to consider is that the majority of this portfolio is restricted, as in it has been based on the CIP and what's in our, when the CIP was established.
Correct.
That is how these reserves were explained to have been used for.
Because they used to just be individual reserve accounts instead of in a big clump like this, the way the CIP is.
So when people are, sorry, go ahead.
great. And May, yeah, if you could get me the breakdown of percentages.
Sorry, the what?
What percentage of the total is CIP and what, not right now, but sometime.
Yeah, no, I'm just pulling up.
I think it's 1.8 is CIP. Because when we had Matt on the call, I think we were looking at just that number. That was the money we sent over, right?
So
that was what we added to the portfolio.
1.7 million.
1.7 million, I think, is the CIP.
No. That was what was budgeted to be invested.
Oh, to be invested
in 2025.
Excuse me, I speak wrong.
So right now, the reserve balance, as in all of our asset lines, have $8,228,000 allocated for them. So this 8 million right here is reserved literally for these assets.
So it's over half.
Oh yeah.
Okay.
And then that doesn't include the or maybe it does. It might. I believe that includes the unallocated, which is we can't have a conversation about that would be capital gains, pulling from capital gains to reduce taxes.
Which we have done.
We have done
on
in the past.
occasion.
And I didn't do it last year because the market is so volatile, and I'm not sure if we're going to be able to do it this year. But that is something, if someone brings it up, the reserves are used to subsidize, lower the tax burden.
Right.
That is true. And then, I mean, the thing is with the CIP is that all these funds, they're going to assets that are on the books to be purchased, and we're getting interest on them. Or not interest, we're able to get actually returns on them. Whereas if they're just hanging out from our in our operating account, we're not getting anything from them.
Is that clear?
Yeah, not interest, return.
All right, so going back to, Jamie, when we have some time between now and town meeting, it'd be good to, and town meeting's always a good shot of seeing other people that we always forget about, because people have a habit of, emerging that first week in May. So maybe we could start to think about another citizen that would be good.
Yeah, I've been thinking, I mean, Sam McGee obviously comes to mind, but
He can't, because he works for Barber Bank and Trust.
Yeah.
We can't have him.
Would love to have him, but can't.
You follow? Yeah, conflict of interest.
He's the one that they give us the bonds.
okay, I
He's
didn't
our
know.
bondsman.
He's my bond guy.
I didn't know we had, yeah, okay. Well,
All
so
right, so
we have all
so
the
we
banks covered.
can't,
Do we have all the banks covered?
oh, I don't know. To the most part, I don't know. Again, I'll give it some thought. I think more eyes on it is better. And again, someone qualified. I think I think Mike, even though Mike has been in the background, I think he'll be a great asset. And I was happy to give him the time to finish his dissertation.
Uh-huh.
He'll be back.
I think he only attended one meeting before he had a defense, and this is the year he defends, so he's planning to be back in September.
Uh-huh, good.
Next meeting,
Other business?
yeah, and it's
Schedule next investment committee.
yeah, I think we'll schedule the next. So, do we meet in early July after or do we meet after town meeting?
I think we should meet after town meeting,
Me too.
and I can report on quarter 1.
So what do you think before we all get busy for the summer, sometime around the 1st of June? Or late May, right after maybe the week after Memorial Day, it might be a really good week to meet. Let's look at that. I'll look at my calendar quickly too. Again, Jamie, I think you asked really good questions, and I don't think any of us feel defensive because, that's how we all learned other. So let's go look at June 6th as the next meeting. Does that work for everybody? Or we could do May 30th, one or the other.
I might be out of town for either of those dates, but I could
Bump it up then to the 13th of June, which is we don't want to meet on Friday the 13th. Never picked that. We could go June 20, or we could move it back up to before Memorial Day. We don't want to meet the Friday of Memorial Day weekend. We're not doing that.
I think that June 6th might work.
June 6th or May 16th.
Well, my
June-
calendar doesn't usually go out that far, but I happen to be free on both those days.
Perfect.
That is
So
good.
June 6th it is.
June 6th
6/6,
June
2025.
at 3 p.m.
Let's go with that.
3:30?
Let's do 3:30. I will
3:30.
speak with Wendy because I think school's out by then. Or
Oh yeah.
the graduation. I'd like to get Wendy in the room.
Okay. So maybe we could
She's
do
not up, by the way. She's not up for election this
I
year.
think she is.
Oh, so
So,
then we pick somebody else. So we'll go for that day. 3:30. So 3:30 is good. That gives Matt a chance to get up here and still get out of here.
Okay.
He's not going to come to that meeting. He's not going to come to the October meeting.
He-
So instead of meeting quarterly, we're going to meet roughly 3 times a year. And so it'd be like in thirds. Is that? Are you good with that?
I'm good with anything. I'm just,
Yeah. I mean,
we have to update the investment policy in order to do that.
to meet more than twice.
It's the investment policy says quarterly, so we would have to update the investment policy.
Well, we don't want to do that. So
No.
we'll stick to quarterly.
Yeah.
So that would put us quarterly anyhow. So we'll be
That would put us
okay.
June, but we won't have it. It'll be more of the meetings won't be as involved.
I'm confused though. If we meet in January and June, how's that quarterly?
That's an excellent question, Jamie.
That's-
Okay. What about in April?
We'll just meet in April
We'll meet in April.
after the President's Day week. We'll just go ahead and bump it up to April. It's just easy.
I'm glad you're here, Jamie, to keep us keep us on the right path. The days are just flying
So-
together. I can't even keep
So
track.
how about the 25th? So I propose either the 11th or the 25th of April.
Well, is this instead of the June meeting or in addition to?
No,
In addition
in
to.
addition to.
Oh, okay.
And then that means we'd want to push our June meeting to July
Right.
and then
After 6:30.
July or
And then-
August
Correct.
to give me enough time to close the books for the period.
So I propose that we do April 25th
Wait a minute,
versus April 11th.
Do your books go out to April?
I'm good on both. The 25th is the day before my birthday, and I might
Oh,
be with and since it's a weekend, I might not be here, or I might have other people.
So is the 11th better?
I'm trying to forget it, but yeah, the 11th is better.
Let's just do the 11th.
okay.
And you're saying not 3, but 3:30?
Yeah, let's push it back a little in hopes that Wendy can attend.
Okay.
Okay.
And Matt will not be there for that.
Right,
Okay.
we don't need Matt, we just need the report.
The quarterly, and we will have it.
No.
We're not going to have the quarterly report by April 11th. That's an excellent point. We're not going to have it by then. We usually get it by the 15th or the 16th. This time we got on the 16th.
So let's go to May 2nd then.
I think April, we'll have it by the 18th.
Okay.
Could you do the 18th? It's Good Friday, it doesn't bother me.
Doesn't bother me.
School
can
vacation
do it.
week.
I can do the 18th.
Let's go for the 18th, because today
Okay.
being the 17th, it puts a spot on.
Perfect. Exactly 3 months later.
Yes,
And
Not
then
bad.
No.
You were saying
Yes.
we have to change the other one?
Yes.
but
Yeah.
we'll worry about the other one after we meet on April 18th, okay?
Okay. Yep.
Yep, that works. And that way we can, so I'm putting this to 3:30 on April the 18th. And I can send out a reminder
Tom Brown never had us meet quarterly.
if you want. I know.
We never met quarterly. So it's, John
Thank
Brown, the
you.
past chair, I don't think we ever met quarterly. So, I mean, that's the goal. But we'll try, let's go for it. It's good. It keeps us all on our toes and it keeps us a good ear, compliant, but it also keeps our ear to the ground and reminding how well that we're doing. And if we need, we can see the changes before they happen to us.
Mhm.
4 short meetings instead of 2 long ones, maybe.
Exactly.
Half an hour
Yeah.
each.
Perfect, perfect.
Okay.
Do I have a motion to adjourn?
Other business.
Other business. Oh, first of all, other business. We did a lot of other business along the way.
So many business. Questions and comments.
How long are you in New York for?
Just the weekend.
Enjoy yourself.
Thank you.
I'd love to see the Matisse show if I was in town.
I've seen that actually. We're going to go to the other one, the Sienna show.
Oh, nice.
Yeah.
Well, I look forward to seeing and talking to you when you're back. And again, thank you for your time and questions, and most of all, zooming in while you're away.
A pleasure. Now I'm going to get
All right. Well, have a good evening and a better weekend.
Enjoy
Thank
your
you.
stay in New York.
Have fun.
See ya.
You too. Yeah. Bye.
Bye.